Our conversation today is with Lee Harris. He is a former CFO, COO, general manager, lots and lots of business experience. Lee, when entrepreneurs first start a business, they're excited about the idea, but really there's a lot of work that goes into it outside of just the idea. And I think you're going to walk us through some of the important things, beginning with, how to prepare a business plan or getting one ready, right?
Exactly. Good morning, Jeffrey. I think what you really want to do is you need to lay your plan out on paper. What are you going to do? What's your service, or what product are you going to manufacture? And then what makes your service or your product unique? From there you've got to sit down and take a look at your competition. Who else is doing what you're doing, or is anyone doing what you're doing? And then you need to start laying out, what my financial statements are going to look like. What type of revenue am I going to have each month when I start up? What type of costs am I going to have, as I'm starting up, monthly? And then laying out what that first year is going to look like and what I anticipate the second year, and then a 5-year plan. Because you're going to be ramping up this business, and you've got to put something on paper, because you're going to end up going down talking to people from, say, the Small Business Administration, or from your local bank, or maybe it's an individual or family member who wants to invest in your business, but they're going to want to see numbers. They're going to want to see your dream on paper, so that they can decide whether or not it's worthy of the money that they would like to help invest with you or lend to you. So I think that's the first big hurdle to get over.
Yeah, and we have found with the entrepreneurs we work with that almost invariably everyone underestimates how much money they need to get started. So any thoughts on that when you're trying to figure out how much you need? It seems like most of the entrepreneurs we talk with, it's not enough. They expect their profits, their income to be higher, and then they find they get really stressed without having that cushion of operating capital. So what are your suggestions or advice on that one?
Well, I think, first of all, I think you're absolutely correct. I think underestimating how much money I'm going to need, because when they're putting together this monthly income statement, they're not considering all of their expenses. An entrepreneur should be, really getting down into the weeds and looking at how much is my insurance going to cost for the building that I'm renting, for the equipment that I'm going to have. What are my salaries going to be, or how much am I going to be paying out? Simple things such as electricity, water. You need to really get into the weeds and look at what all those expenses are. And it's not going to be pretty at the very beginning. You're looking at probably losses for the first few months or the first year, until you can get your product to market, if it's indeed a product, or until, your people get to understand what service you're offering, that you have money coming in. And that really goes back to, again, to getting, having a relationship with a banker or with the Small Business Administration. There are a lot of programs. Even during this pandemic, we've had the EIDL program through the Small Business Administration, which is the Economic Injury Disaster Loan. That can loan up to $150,000 at a low interest rate. Programs like that, getting some type of cash flow, revolving line of credit at the bank, once they've seen your business plan, can help you cash flow your business. A revolving line of credit helps you pay the bills, and then as you're selling, you're putting that money back against that line of credit. But that revolving line of credit will help you cash flow your business. But you need to look at all the expenses and do it with such a critical eye that you don't miss things.
Well, and I would another issue that we've run into with entrepreneurs is that perhaps they're really smart about the widget thing that they made, but that doesn't necessarily mean they're the best marketing person, the best banker, the best HR person. So we always tell them to ask for help. It's sometimes it seems like it's the easiest way to find out an answer, but it's the hardest thing to do. What is it that makes us just resist going and asking someone for help?
Well, and I think one of the programs that the East Center has on campus, the mentorship, and as you well know, I mean, y'all had me working with some students and mentoring some students, but it's also knowing where your weaknesses are. Someone may be an accountant, but they may not be a tax specialist. And so, a lot of people starting their business, they don't have that tax background. Find a local tax professional. They can guide you in, in helping to keep from paying all your profits into Uncle Sam. They can use, strategic things, but also they can help you in determining how to set up your business. I mean, do you want to go through a legal Zoom and set up an LLC? Do you want your LLC to be an S corp? Do you want to set up a C corp? There's a lot of different tax advantages in how you want to set up your business, and of course, it's sole proprietorship. But you need to seek out those experts, and a lot of that can come through talking to parents, talking to professors, talking to friends, so that they can guide you to someone who's perhaps helped them or someone they know that has that type of expertise.
What about marketing? We tell our students that if you can't articulate how your product or service makes money, it's not a business, it's a hobby. And we stress to them, go out and talk to 30 people, go out and talk to 50 people, and find if you really have a market. And that's not just for startups. I mean, you have worked just across many different sectors. It's always about finding and taking care of your customers, isn't it?
Absolutely. Communicating with your customers. The last business I worked with was a local company, and we did business at people's homes. It's going and visiting your customer after workers have been there and finding out, are they satisfied? Did we do everything we said we were going to do? In today's market, there's a huge advantage with social media and also what's out there on the internet. There are opportunities to market that, in the past would have been billboards or mailers or things of that nature. But you can find so much information on how to present your product to the marketplace. But I think first and foremost, once you have those customers, it's keeping your customers and keeping them happy. And that involves communicating with them on a regular basis. You don't want to bug them, but you want to bother them enough that they know you care. And then word of mouth is going to spread is one way to grow your business. And the other way to grow your business, as I mentioned, would be through social media. And then maybe finding that company that can help you build your web page. And then how do you get your web page out there through search engines? So again, it may be finding that other professional who can help guide you on your marketing.
And we also talk a lot about how to make sure that you're running lean. You certainly want to have adequate staffing, but nothing's going to drain your financial resources and having, cousin Eddie tucked away somewhere in finance or somewhere. So how do you make the determination of the proper level of your workforce?
Well, I think when you're putting in so many hours and you just can't put any more hours in, you need to get that other person in the office that you can start giving some of that work to, because when you're starting this business, you're starting out very small. It might be you and your partner, and you need a little office clerical support, because you're gonna have to enter in this information into some type of accounting system or provide it to into some software, and you just start growing it that way. But you you have to make the tough decisions. You can't necessarily bring the family members on, and every dollar, you need to look at it. It's coming out of your wallet. You're going to have to pay it back if you've borrowed it, or it's eating into your profits. And you just have to look at things with such a critical eye. What does someone bring to the business? And also to hire people who share your vision, who are excited about your company and what you're trying to accomplish, because that's the way you're going to grow the business, is strategic hiring.
Lee, you also have talked with me several times about you're brought into a business to sort of clean it up, right? Mm-hmm. And we've had these conversations where you talk about they have money over here and it should be over here. And number one, how do you find that? You're almost like a little private investigator. And number two, how do startups even manage knowing where to put what fund here and what fund there, particularly when they're trying to watch the dollars and can't afford, the top of the line financial advisors or accountants?
Well, one of the things, there's some good software out there. QuickBooks comes to mind, and you can access it on the internet. It's excellent for smaller companies. But a lot of it goes back to the chart of accounts. We don't hear a lot about the chart of accounts, but every time you have a sale, it needs to get coded to revenue and say accounts receivable. Every time you have an expense, that expense may be an asset. That expense may be a true business expense. And you've got to be able to put it into the proper bucket. And, there's some services out there. One of them comes to mind is 1-800-ACCOUNTANT. And, in their program, in their software, you would talk to an accountant. Maybe we're operating out of New York City, but they're going to say, hey, okay, you need to enter your expenses, and you're going to label them as an expense and what it was for. And then you're going to label your income as income and, who you sold to. And that's really getting down to the basics. But it's that type of information, that's what's going to build your income statement, your profit and loss. It's also what's going to build your balance sheet. This is what we have in equipment for making our widgets. And here are the liabilities. Here's what we owe. We owe for accounts payable. We owe for a loan, a short-term loan. Here's how much cash we have. And one of the critical things that small businesses fail to do, in my opinion, is reconcile that balance sheet every single month. You reconcile it against, your bank, against the bank statement. Here's what my software says I have, and here's what the bank says I have. And to make sure things are going in the proper bucket. If you reconcile your balance sheet, your income statement, your profit is going to be correct. It may not be in the proper bucket on your P&L, but your profit, your net income, is what helps balance your balance sheet. So I know that's a lot of accounting speak, but it's very, very important that you have good financial statements, but you don't overcomplicate your financial statements. You end up with something like Charlie Brown's kite string, all messed up. Keep it simple.
Well, without naming the name of a business, can you give us an example of where you came into a situation and you found they were doing X, Y, and Z, and just by changing it to A, B, and C, you were able to, maybe get them more in compliance, but definitely save them some money. Can you give us an example of that?
Oh, absolutely. I had a business that I worked with where they were recording things that were not company expenses. For example, health insurance. The company wasn't contributing to health insurance, but they were facilitating the employees being able to purchase health insurance. It was being recorded as a company expense, and it wasn't a company expense. It was a liability, just like a withholding that's coming out of your paycheck. Employees were having their health insurance withheld from their paycheck, and so instead of recording it as a company expense, it needed to move over as a liability. And here's where the employees are contributing towards that liability. That's why it's important to make sure things are in the proper bucket, and focus when you're balancing your balance sheet. every single month, that's the type of things you find. It's low-hanging fruit. And so that's what you need to look for.
So it begs the question, how do things get so disjointed and out of place to begin with? Is that just a lack of experience? Is it a gray area where it's a judgment call where Lee Harris might say, hey, let's throw it in this fund, and Doris will say, no, let's stick it over here. Which is it?
It's not a judgment call. These are very straightforward rules, but a lot of it is, that's why you need a professional. That's why you need either a bookkeeper. It doesn't have to be a CPA. It's why you need a bookkeeper or a company like a 1-800 accountant that can kind of help guide you. And also, the Bookkeeping for Dummies book. I mean, something that can help guide you, that you're researching in all the spare time you have setting up this business, but you have to self-educate. And it also goes back to hiring the right people. You don't need a full-time accountant. You don't need necessarily a full-time bookkeeper. The person that's doing, your accounts payable or coding things, as long as they've got the experience, and then, that's to me very, very important. But it's finding a local service even that can help you in areas, not just in accounting, but where you have weakness.
Sounds like a key to this is to do it right from the get-go and not wait until you have to go on this Easter egg hunt for trying to find all these little pots of money or where things were put here or there. And if you set it up right and do it right and get the right people on the front end, that it's going to be just a lot simpler.
Absolutely. It's you can overcomplicate. I know when I was in the scrap metal business for a long time, and I was looking at how a corporation was wanting to code all of their monthly information, and they were creating all these profit centers and cost centers, and just we're going to allocate costs back and forth and back and forth. And I told one of the guys who was designing this, I said, you need to remember one thing. We make little pieces of scrap out of big pieces of scrap. We do it by a couple of different processes, but you don't need to overcomplicate. Keep it simple. What information do I need to know every single month to manage this business? And at first, it's going to be a good profit and loss. Later on, as you go down, you're going to want to create, perhaps, depending on your product lines or your services, you may want to create profit centers. You may want to track cost centers. But right now, keep it simple. Get a basic P&L. Unless you're offering multiple product lines, that you need to start breaking it out, but that's probably going to be down the road. But the big thing is, don't overcomplicate your business. You can create a ton of reports and gather a ton of information, but come up with those 5 things that you need to look at every single month that are going to help, for you to monitor, to know that your business is healthy. Look at your cash flows. That's the lifeblood of the business. It's looking at your payables. Are you stretching people out too far, your vendors? And then look at your receivables. Are people paying you on time? So there's 3 items out of those 5 that you may need to look at.
So it's easy to get caught up in just being immersed in this startup 24 hours a day, and you've been down this path several times. But I know it is critical to you that folks and for you personally to enjoy the journey, because you're going to look back on this and you have been so immersed in it, you didn't really enjoy the ride. So I think your final words of wisdom would be like mine, to say, look, find some balance and make sure you smell the roses along the way.
Absolutely. Remember, it's a marathon. It's not a sprint. Enjoy the journey. Step back sometimes and look at what you and your coworkers and your partners and your mentors have created, and kind of relish in that. But enjoy the journey.
Well, I appreciate you sharing your experience and your expertise with us, not just today, but also on the ECAB board, and
Thank you.
look forward to talking with you again. Thank you.
Thank you, Jeffrey. I appreciate it.